Australian retail sales for March missed the consensus today, growing only 0.1%. Diana Mousina of CBA is on the line now to talk through this data. Diana, firstly, walk us through the picture that a declining dollar, yet rising inflationary pressures are creating for the Australian consumer. Could this data be set to become even more stifled?
Well, the retail data was certainly a bit disappointing. It did miss market expectations. I think that overall what we've seen in the past 6 months is quite a strong pickup in retail spending activity. So it was not surprising to see a bit of a weakened number, but we weren't expecting such a low outcome. I think, in our view, retail spending will start to pick back up more towards around a long-run average level, so monthly growth rates around 0.3% as we go through the year. The consumer savings ratio looks like it's declined, and it will continue to be a bit weaker over the year as well, and that tends to really boost up consumer spending. And as well as that, we expect that consumer sentiment will start to rise when the unemployment rate peaks.
This figure will come as a blow to the RBA, who had hoped that non-mining sectors would respond to record low interest rates, as it opted to hold rates at Tuesday's meeting. How far has this line of policy contributed to the confused Aussie dollar outlook at present?
I don't think that the RBA would be too concerned about the 1 month change in the data trend. Overall, we're still seeing quite strong annual growth outcomes from the retail sector, and it still looks like the consumer spending part of retail will add about 0.2 percentage points to GDP growth, which on a long-run basis is quite a solid contribution. I think that the present indicators that we're seeing in the non-mining economy still indicate that the rates of growth will be enough to offset the present decline in mining capex activity, so the RBA won't be too concerned about that. The appreciation in the Aussie dollar will provide a bit of a downward impact on growth, but I think that the currency would need to appreciate quite significantly and go back above parity if it was to have a significant impact on the RBA's forecasts.
In what continues to be a busy data week for Australia, tomorrow we'll see the release of unemployment data. With persistent weakness in the labour market, where are you pitching this figure?
We're looking for employment growth around 9,000 over the month. That's kind of what the underlying indicators are suggesting. That type of level of employment growth would still not be enough to keep the unemployment rate unchanged. You need about a 17,000 increase in jobs every month to keep the unemployment rate unchanged if the participation rate remains the same as well. So we're looking for the unemployment rate to rise again from 5.8 to 5.9%. And that type of unemployment rate would still be lower than what most people had been expecting for this time of the year. I'd say, six months ago, people probably expecting the unemployment rate to be at around 6.1 or 6.2% at this stage in the year, when people were expecting all those mining employees to really start coming off. So if we do get a peak in the unemployment rate at around 5.9%, I think that would be quite positive for the growth outlook, and it would certainly be below most people's expectations, including the RBA.
And lastly, where do you stand in the debate surrounding next week's government budget? The Commission of Audit has backed radical cuts, while the OECD claims that Australia's economy is too fragile to absorb a tough spending budget, as others question the necessity of what's been advertised as a harsh federal budget.
From what it looks like, I think that consumer sentiment will be quite negatively impacted this month, given that we've had talks about this deficit levy that may be in the budget next week. Now, we're still unsure about the exact details of the levy or exact details of the government budget, but I think it will be quite a tough budget. The government does seem like it's very focused on bringing the budget back to surplus over the next few years, and from what it seems like, a lot of the rhetoric has been around means testing and co-payments in a lot of different parts of the economy. So I think that the impact on consumer sentiment will definitely be negative. In terms of whether that will have a sudden impact on consumer spending, I think the short-term impact will be modest, but we'll just have to see the details of the budget.
Thanks for joining us, Diana. That's all we've got time for right now. Goodbye for now.